Oh, shall I start? Good morning, everyone. We will wait another 10 to 15 seconds. There are still participants waiting in the waiting room. Once again, a very good morning, everyone. Welcome to Prepare with William O'Neill India. My name is Rajashekar Kongari, equity research analyst, and part of MarketSmith India team, which manages model portfolio. Before we go ahead into this podcast, I'd like to state the disclaimer very clearly. Registration granted by SEBI, membership of BASL, and certification from NISL in no way guarantee performance of the intermediary or provide any assurance of returns to investors. Investments in securities market are subject to market risk. Read all the related documents carefully before investing. Let's look into Nifty's daily chart taken from our website. And it is very important to understand Nifty's price volume action to gauge the market and to have a short-term view on the market as well. As you all know, Nifty has scaled a new all-time high very recently, and it traded above 20,000, which is a very monumental milestone for the index. At one point during COVID, Nifty was trading at 7,500 levels, and most of the investors were bearish, and most of the investors have also lost huge amounts of money. But as economy came out of COVID restrictions, not just Indian domestic, globally also restrictions have come down, and the Indian market has clearly showed its resilience and the amount of growth the Indian economy as a whole is able to generate, and foreign institutional investors' confidence on the Indian market is also once again proved. And Nifty scaling 20,000 is one uh, is a point to point out that Indian market is very intact, and next 1 decade is going to be India's decade, as most of the uh, analysts across the globe are expecting. That is on the macro front, but if you look at very closer on the last 1 week to 2 weeks of Nifty's trading session, you will see that after scaling new high, there is some slight uh, profit booking or selling happening on the index front. You can see here last 3 trading sessions. That is this whole week, Nifty has closed in the negative territory. And in the last 2 trading sessions, if you see both the times, both the occasions, Nifty gap down lower, indicating various signals. This is not just with the benchmark index Nifty. This the broader market indices are also showing these signs of weakness. So definitely some kind of weakness has come into the markets, and Nifty is currently trading at below 20,000 and 19,700, around that level Nifty is trading. And 21 DMA is very closer to the Nifty. 21 DMA is going to be a crucial level, and 50 DMA is also very closer to 21 DMA. So these two levels are going to be crucial for the index. Previously also Nifty tested these levels, and it found support, and after which Nifty scaled a new high, and we're expecting a similar kind of pattern. But in the market, anything can happen. So that is why we need to have a two-step approach. When the market is going up, what are the levels to look at, and when the market is going down, what are the levels to look at? If you are aware of these 2 steps, then definitely you'll be able to take good decisions. And then on the market status front, we are in a confirmed uptrend. That is because we changed the market status to confirmed uptrend from under pressure, because Nifty scaled a new high. However, we have seen a few queries from the customers asking why the distribution day count is at 5. That is because the market has not gone through the full circle. The circle, by circle we mean from rally attempt, from rally to under pressure to correction to rally attempt to rally. This is going. This is a one full circle. If the market goes through this full circle only, then we reset the distribution day count to 0. Otherwise, the distribution day count will stay intact. That is because weakness will always be there, but only once the Nifty bottomed out, that is when the Nifty bottoming out is identified by correction phase and rally attempt, and FTD gives a bullish view, then only we change the market status to rally. In that case, the weakness caused by distribution days will be negated. However, that has not happened currently. That is the reason we are still counting the previous distribution days as well. And during the week, we had one distribution day, that is this candle, because Nifty fell more than 0.2% and the volume was also on the higher side. In the yesterday's trading session, even though Nifty closed more than 0.2% lower, but the volume was lower compared to the previous session. So we have not considered it as a distribution day. Overall, currently distribution day count is at 5. So that is the one point we wanted to make. And we have answered our queries as well regarding this similar point. So on the market status front, if there is any couple of distribution days addition going forward, and Nifty reaches 50 DMA and closes below 50 DMA on higher volume, we might change the market status to under pressure once again. And once market status is changed to under pressure, we'll be start trimming down positions, and will also our additions will be not so aggressive. We'll be very cautious while taking fresh entries. Coming to the news section, a couple of stocks which are news are first is JSW Steel. The company is planning to sell its plant in USA to West Virginia Properties for a consideration amount of $24 million. And this is majorly because the company is saying operating mines is not economically viable in the USA because of absence of coal mining lease and plant lease. Sunteck Realty and IFC have created a joint venture or joint platform for investing around some 50 crores to expand green urban housing in Maharashtra. Glenmark Pharma is going to divest a 75% stake in Glenmark Life Sciences at a share price of 615 rupees per share for a consideration amount of 5,500 crores of rupees. Vedanta approved raising funds by issuing non-convertible debentures on a private placement basis up to 2,500 crores of rupees. Coming to institutional activity, yesterday FIIs have sold heavily. They have sold more than 3,000 crores of Indian equities. On the domestic front, institutional investors tried to give support for the market. They bought more than 700 crores of Indian equities. Overall, on the net basis, institutional investors were net sellers in yesterday's session. Global market, USA closed pretty much lower overnight. You can see three major indices: Dow Jones, S&P, Nasdaq Composite have closed more than 1% lower. Asian markets are trading mixed. You can see Kospi and Nikkei are also trading in the negative territory with a decline of 0.4 to 0.9%, whereas on the other side, Shanghai Composite is trading in the green territory with a gain of 0.6% as we speak. GIFT Nifty is indicating a muted opening around 19,700 level. That is where Nifty closed in the yesterday's session. So not much gap is not expected on the opening side. But if you are going by the global cues, weakness might continue in the Indian market as well. And 50 DMA and 21 DMA are going to be levels to be watched in the current market. So please be watchful for your positions as well. If these levels are tested, volatile action can be expected in portfolio stocks as well. Coming to the chart of the day, we have picked Kei Industries. Currently, it is trading in a stage 2 cup with handle base. But currently, it is trading in the handle portion of the cup with handle base pattern. The volumes have also tried up during handle portion, which is a positive sign. Here also, if you look at handle portion, volumes have tried up. Another 6% is there for the pivot. On the market front also, currently there is some selling happening in the market, so it's not a major, it's not a correct time to take fresh entries. But by the time stock comes to pivot and if the market improves, then definitely a very good contender for addition. If you look at by the ratings wise, the EPS is 92, indicating a very strong fundamental character. ROE is also very good at 18%. Technical ratings are also staying very intact. RS rating of 79 is very good. Accumulation distribution, the rating is at A, indicating good amount of accumulation in the stock. Another key factor, that is number of funds. Institutional investors have been a very good supporter for the stock, and new funds have been getting invested into this company for the past 4 quarters. You can see a very good improvement on consistent basis. Again, a positive sign. Overall, we like the story, we like the ratings, and stock is also on the chart wise also it is looking very good. So definitely a very good contender for portfolio addition. Thanks for joining today's pre-build. Have a good trading session.